Welcome back. Now, a quick look at the Nigerian energy stocks. There was a major sell-off on the shares of Seplat, and that pulled down the oil and gas index down by 3.37%. Seplat dropped 9% to close at 345 naira 80 kobo. It was followed by Total, which lost by 1.45% to close at 265 naira. Oando also dropped, closing at 7 naira 78 kobo, down 0.13%. All the other stocks, Corn Oil, Forte Oil, Mobil, and MRS remained unchanged there. And looking at the daily index return, it went down 3.1%. Year to date, 4.5%. Price to earnings was just not available there, and dividend yield 2.1%. Well, let's look at the latest in the oil and gas sector. Just recently, the Group Managing Director of the Nigerian National Petroleum Corporation hinted that oil exploration activities in the Chad Basin will resume in 6 weeks. And this is because of the improved security in the northeast. In the meantime, EcoBank Research Group, in their latest report, noted that drilling activities in Nigeria have been on the upward trend since the beginning of the year, especially in recent months, and based on announced plans and upcoming field development efforts planned for the rest of the year, there could potentially be more than 15 rigs in the country by the last quarter of this year. The research group noted that these activities need new financing structure. I'm being joined now by the head of energy research at EcoBank Group, Dolapo Oni. Good morning, Dolapo. Thank you very much for joining us.
Good morning, Chimeze, and thanks for having me.
In your recent report on oil and gas exploration, you talked about increase in drilling activities in Nigeria. Give us an overview of where we are in terms of the drilling programs.
Okay, good. So basically last year, we saw a bit of decline in drilling activities in Nigeria, and that was really measured by the rig counts that we saw in Nigeria. Nigeria is a country that at the peak of oil production, typically you have somewhere in the region of about 19 to almost 20, 25 rigs operating in the country on the average. But that declined to about 6 rigs last year, and it was really low. I mean, I think at the high point of last year, we had about 14 rigs operating in the country, but that was in the first quarter of the year, and towards the later end of the year, it started to fall to the point where there were only about 6 rigs. But this year, so far, we have seen a recovery in the rig counts, and we're seeing more than about 10 rigs currently in the country.
Increase in these drilling activities, I see, is majorly led by international oil companies. What role do you see independent and local oil companies playing in all of these?
Yeah, and again, just to quickly mention that, drilling tends to be a lead factor for production activities. Now, to your question, I think the independents are going to play a very key part. If you look at DPR announcement early in the year, around February, they said that they had approved about 7 new field development plans for mostly local and indigenous players. So essentially, those guys are going to start developing various fields. And I think towards the later end of the year, even based on some of the announced plans that we have seen for various fields, you can see that there will be a lot of effort on drilling fields that are expected to come up this year, fields that are trying to expand production. So they'll need to drill so many new wells. And we're already seeing a lot of orders being placed for rigs to be brought into the country. We're currently tracking roughly about 5 of them. And we know that before the end of the year, other announcements for other plans are being made.
Now, Dolapo, looking at the country as a whole, what does this upward trend in drilling mean for the economy?
Thank you. Now, it's a lead indicator really for production. And most times when you start to see rig count starting to increase in the country, it means 2 things. Number one, exploration is happening, which means people are looking for oil. And on the other side, it also means that people are also looking to develop oil fields. They are drilling to either appraise discoveries that have been made, or they are drilling to increase production from fields or fields that they are trying to produce from or already producing from. So what this means essentially is that we expect to start to see some recovery in Nigeria's production towards the higher ranges of 2.5-ish. And what that also means is then in the extension of that is that more revenue for the country, for the government, more FX as well to as these drilling activities continue to increase.
Now, in your report, you noted that funding is a major challenge in this drilling campaign. How much investment do you think is needed, and why do you think funding will be a challenge?
Yeah, funding is a challenge because the banks are really stressed. If you look at the makeup of the loan book of most of the banks, oil and gas is still the largest portion. And there isn't so much leeway in terms of lending again to that space from the banks because they have so much exposure already in terms of non-performing loans. But as the production starts to increase and hopefully revenue starts to improve, and some of these companies, of course, start to pay back on their loans, increase their flow of cash to the banks, it will help to increase the appetite for new lending to this. But more importantly, I think this is an opportunity for private equity, for equity players to also look at that space as well, because there's a significant amount of invested need. I can't put a figure on it right now, but I know it's quite a significant figure, because there's a lot more drilling activity that needs to be done for Nigeria to achieve its plan to increase its oil reserves to about 40 billion barrels and also increase production to 2.5 and maintain it.
Now that we are beginning to see oil price rise, currently above $50 per barrel at the international market, and exchange